What's going on, everybody, and welcome on into the channel. Happy Sunday evening. We are going to be diving into the market shift that we're seeing. We're looking at futures right now. We'll talk about futures. We'll talk about the overall markets. We'll talk about some crypto as well. And then I have right in front of me, I have 6 specific plays that will fit the current trends in the market. We'll talk about them. I'll talk about how I see them, and then we'll dive into some questions. A little Q&A, we'll dive into the comments, and I'll cover a bunch of stocks you guys are talking about, do some technical analysis, and look at some stuff and see what we're looking at, see what we're feeling, going forward. So that said, futures as we speak, I could zoom in a little bit here, but futures are surprisingly green. I'm surprised. To be honest, I am surprised that futures are green. I thought they'd be red. Based on how we finished, and also if we dive in, let me pull up the Webull here. Let's go to the big chart, so we can see things nice and clear. Actually, hopefully this setup is looking good. I'm just going to adjust if I have to. No, yeah, we're good. We're good. Sorry about that. Don't want to confuse you with that little image there. But okay, so let's look at SPY. Overall market right here, we got SPY. Reason why I was like, okay, after last week, past 2 weeks, I haven't really been around watching stuff like at the desk. I've been with family at the beach, so I am quite a few shades darker, if you guys can't tell already. But that said, we have, we kind of saw a little bit of choppiness the past week. We didn't really make a big move up or down. It was kind of in this range from 442 to 435, 436 on SPY. So it's not really a big range. Percentage-wise, it's not much. But overall, we have noticed that the trend of this rebound post-pandemic crash has started to slow, which I think is a good thing. Slow and steady growth rather than just straight up, more sustainable, right? The longer we go at the pace that we're on, right? We had some crazy slopes and how the overall markets were recovering. The longer you go at that pace, the higher probability, at least how I see it, for sharp pullbacks. And we saw some sharp pullbacks. Those have all been getting bought up, but I would like to see more of a steady movement. Not necessarily up or down, just more of a steady movement would be easier. Or give us a better feel, right, for the markets. We're kind of in that chop mode. But that said, what are we noticing, right? Mask plays. Everyone's talking about mask plays. So let's dive into some of those pandemic plays, some mask plays. And that's that. We're going to dive into those plays first, and then I'll talk about risk reward, what I like on them. But also the mask narrative will also shift. So we have to be ready for that shift. It may be a good Monday pop and dump, right? The mask idea might make sense, but everyone's thinking that. Everybody, these plays have been pushing up off bottoms. Everybody might be thinking that idea, so we might see some opportunities on the backside, or you might want to start looking to more medical plays rather than mask plays. That's kind of the shift I'd be watching for with the recent, mask news and mandates. Vacation was good. Doing well. We'll see what happens, but I did get quite tan. I will say that. When you spend a couple days on the beach, that's what happens. Okay, so AHPI, Allied Healthcare. Take a look at this daily chart. This thing has been kind of, as they say, soaking in the $5 to $6 range. Every time it comes down to that $5 to $6 range, ever since mid-July, this thing has been getting bought up and popping right back on up. So support we got pretty well defined. Now we're significantly above that right now, but decent levels of support here. This stock gets down under $7. That's areas I think is a good accumulation zone with minimal, with a decent risk reward profile here. Ideally, what I would like to see for this guy would be a shot back up over 10 and getting a sustained move over 10 for a couple of days. And then maybe there's an ultimate massive backside trade, which I want to be a part of personally, but I'm not going to fight that earlier than it has to be, right? So I'm going to wait and see how this one plays out. We have a couple wicks here up to that $10 level, $10.30, and then here's $11.50. We'll see how it plays out. If we can get up into that double-digit range again and it starts to hold there, that's a good sign, and I think shorts could get squeezed continuously to the upside for the next couple of days if that holds up. However, if it doesn't hold up and we get back to that 10, we might see a gap up into that $10 range and then a fade off the rest of the day. That could be certainly a possibility as well. So just make sure this is a play that personally, if we wake up tomorrow morning and AHPI is trading over $10, I have no interest in the long side. Could it go crazy? Yeah, sure. I have no interest in it though. It's getting a little too crazy at that point, and the risk reward's just not there for me, right? Short side maybe, but I would imagine it's probably going to be a pretty hard to borrow stock. It'll be the fees will be quite high on the short side. So personally, I'm not sure that I would be super interested in this one tomorrow if it already opens up over 10 come 4 a.m., 7 a.m. Eastern time. We'll see how that plays out. That's one. Clearly, good risk reward here down in the low fives. You don't be the person that ends up buying this thing, averaging down, and next thing you know, it's sub $5, and you're like, no, masks are coming back. It's going to go into the way. Don't be that person. This thing can go down to $3 before it ever goes back to 10. Just something to be cautious of, especially into the August month. But the narrative of penny stocks aren't good in August, right? It's tough to trade in August. That's the narrative the past couple of years. That narrative could change anytime. Just because everyone's thinking that's where things may change. So you want to make sure when everyone's looking one way, you at least have your eyes, you're at least, your head's on a swivel back to the other side to some degree. Okay, so there's AHPI. APT is the next one. APT, what do I have written down? I'd say risking $10, looking for 15 plus. This one's actually got a nicer chart in my opinion. It's been kind of more of a sustained move. Yeah, there's range here. There's lots of range. I would like to see this thing holding over $10. So if you get a dip, that's the opportunity in my eyes here for APT. And then looking for $15 ideally would be a beautiful target on this guy. Zooming things out on the weekly chart. Yeah, this thing, back in the winter months this past year, we saw this thing up around $20. So, I think that this thing has range. It's a lower float, not as low float as AHPI, but APT is another one of those mask plays that has that type of range as well. Held up a lot better. I would risk it down to $10. Under 10, it could wick down below 10 briefly, but I would like to see it holding 10 pretty nicely. If not, get out if you're looking to play the long side of that one, because this thing, again, also has lots of range on the downside as well. This thing can be back down to $7 before you know it, okay? And you don't want to be holding it all the way back down because there's no need to do that. You don't need to waste your money, waste your time. There's capital being tied up in something that doesn't really need to be tied up there, right? Okay, then if all these are going crazy, where do you look to as well? NBY, kind of like your other, I guess, sympathy play to the mask narrative. Let me zoom on out here and zoom us back in. Look at the weekly chart here. NBY being loaded up, tons of volume, but just hasn't been moving too much in price. This is one that I like as a short on the backside of this eventually. But I would like a really nice spike. I want to see a really nice spike. Anything up over 75 cents is where I would start to say, okay, this might be a decent short opportunity. Is if I see volume fade out, momentum fade, the backside will be nice on NBY if the mask narrative cools off this week. That's one that I'm liking there. But in the meantime, under 70 cents, I'm not looking to short this thing. The risk reward here under 70 cents makes no sense to go short. So that's the play that I have, or that's the idea that I have working on NBY. Let it make a nice move, and that'll be a decent backside is how I see it. Again, of course, having risk management, risk reward in check. Thing starts pushing on up, and it keeps hitting new high. I'm not going to hold it on the short side as it hits new highs. I'll look to enter with a risk being a recent high. It crosses that high, I'm out, right? I can always get back in. Okay, that's that. And then ITP is the next one on the list here. ITP got some attention on Friday. Popped up here to just about 53 cents. Fell back to 43. Tons of range here. Over 50. I like this on the short side, but this thing can make a nice little move. I would be risking on the long side this thing down to about 40 cents. Don't want to see it drop below 40 cents, but risk it to 40 cents. So right now you're looking at about a 4-cent risk, and your reward here is, I would say, 50 cents or more. So you're looking at about 6-cent upside, with potential for more. If the mask narrative goes crazy, and this is a sympathy play to that as well, then great. You're looking at 6+ cents. Or you're looking at a 4-cent risk. So your risk reward is decent there. It's not, perfect. I would like to see a little more upside potential here, but based on how small caps have been trading, August, generally speaking, isn't the best time. There's less volume. They're not as hot. So I wouldn't be looking for targets up here towards like 75 cents. I have a line here at 75. I wouldn't necessarily be targeting 75 here. I'm making sure I'm taking profits along the way and making sure if I get in here at 44, then I'm not letting, and it goes to 50, I'm not letting this thing come back down and becoming a loser. No way. I'm taking profits pretty quick in this market. Okay. NBY. I'm going to go through some of the questions in just one second. Now let's look at some large caps. We got ZM. and then Peloton. We'll talk about those two guys on the large cap side. I might play these two with shares personally, and not looking to go options here. You could, but I might just go shares on Zoom. Zoom, I like it right here. Would love to see it holding that 375 area. I'm zooming in quite a bit here on this chart. Zooming in right on Zoom. So Zoom, again, the narrative here with the cases pushing up, mask plays. Zoom did well pandemic. So here you go. Back to those pandemic plays. Here you go. Into the winter. It kind of makes some sense, right? But I like 375 to be holding as support. Could it go lower? Yes, for sure. You can even draw a trend line. We have some wicks down into this range. So could it drop down into like that 365 range? Sure. It's up to you how you want to play it. I personally would like to play it for that 375 as my support. Don't want to see it falling below that level. And then I'm looking for price targets up towards about 400. 397 would be the first target, and then 400 plus would be the next target. So if I can get in sub 380, I'm going to risk less than $5 for at least $20 profit. That's a beautiful risk reward right here. Right now, percentage-wise, it's nothing crazy. So if I buy just shares here, I would be going in a lot heavier because I can, I feel like, I'm going to risk a couple dollars. So let's say I risk it from here down to, I'm going to risk 1% for like a, 5% gain. So you have a pretty good risk reward profile there. Of course, you can play options as well. Personally, I probably will just play shares myself if I trade Zoom. And then PTON is the next one as well. Peloton is it's kind of putting in those higher lows. I would like to see Peloton holding up 115. Why 115? This is kind of this box. I get rid of this box so we can see this a little better. So 115, if we go back, what do we got? Look at this. This is an area right in here, this 115 area. If I can fix this line, make it straight, there it is. Was a gap right here, two highs, so was resistance there. It didn't respect it perfectly on the support side here, but I would like to see 115 psychological. So I'm going to risk $3 to the downside from the current levels, and then I'd be targeting up here towards 125 plus. So if I can get a sub 120 entry, I'm going to risk less than $5 for at least a $5 target to the upside. And if Peloton pushes even higher, I think 130 plus is possible. 140 would be the next target after that. So some decent potential on that as well. I would probably play this one on with just shares as well. Just go heavier on the share side. And manage my risk accordingly, but that's the play at least on those. So there you guys have it. Those are the plays in terms of the COVID narrative, mask narrative, back to that kind of the hot plays during that time frame. There you go. So that is that. Let me go back through some of the comments and we can talk about some other plays. I'm seeing AHPI. We talked about that. Vaxart, VXRT is a code play. Yes. Also, we got to talk about Moderna, right? Because we talked about that a while ago. In a video, it's like this stock is unstoppable, right? It's gone even higher since I made that video. The XRT took a pretty substantial hit. I would like to look into the news there this week, but this pulled back. So you're looking at, I would say, you got some support down here, sub $7, down into the low sixes. There's some good support down towards $6. So this is another one that has that potential to squeeze. So Vaxart, if we're just looking technically speaking, if I'm going to get in this thing, I'm looking for, let's say, under $7. If we can get it, we might not. But if you can, under $7 is great, risking to $6. So I don't want to risk more than $6. Let's say from the current levels, if I risk down to $6, that would be, it looks like I would be risking about 15 to 16% downside. But our upside here, if we go back to the recent highs up towards 9 or 10, you're talking about from where it's at 25+% upside. So the decent upside, decent risk reward here. Could it squeeze even further? Yes. Some of these highs up here towards this 10 would be about 40%. And then up towards 11 would be about 55%. It's pretty good. On the recent pullback on Vaxart, you might have an opportunity there. I'm not sure if there's more news driving that one. Just be careful of that. But I like the idea. Okay. Let's see. VOR, risk reward. Let's take a look at this guy. Not VO. We want VOR. For biopharma. This thing is getting down low. I would like to see it holding 12. This is the problem with this type of chart, right? Is that one of these days, I forget that stock this past week. I wasn't paying attention, but there was one stock that had a very similar chart that made a crazy move in the after hours. One day, EZ, something like that was one of the couple of letters on the ticker symbol. EZC, EZNC, something like that. But this thing to $12, would like to see $12 holding. Outside of that, though, this could easily come down to $10 if it keeps falling below. So just if you're going to try it here, try it, but risk it down to 12. That's the current lows we saw a couple days back. 12 can't hold. Personally, I'd step out and see if it holds another support level. So that's my idea there, at least. Don't know anything about the company, so I can't really speak upon that. But chart-wise, $12 would be the area that I would be looking at. And then below 12, look for psychological levels. So 11 and then 10. 10 is a pretty strong psychological level of support. You could get a good bounce there. You pair up some news. There you go. Also, we're talking about mask plays. We're talking about those hot pandemic plays. I do want to mention there was one of the stocks that I've been swinging for the past couple of months. I took profits on one of the pops. NVOS got a pump, a cancer-related pump back on the 15th. This is a medical play. So if we start to see that money goes from masks to more of the medical and more the medical field, technology, you talk about diagnostics. If money starts shifting into those types of stocks, or we start seeing some press releases from some of those types of companies, this is also one that I do like. Just an update on my swing there. It's a bottom swing. I'm playing it as a bottom swing, but I took some profits on that pop, and then I've just been re-adding this thing under $2. It's just my play. Nothing super heavy, but I'm in with, like, I would say just over about a half of a full position size. So it's it's slowly as it dips. It's just my strategy in this one. I'm expecting this one to go lower in August, but could the narrative shift to those medical plays? This is one of those that could get caught up. It's a low float. It gave us a little hint of a run a few weeks back, so traders might come to it and start loading it up. We'll see how the next couple of days goes. I wouldn't be surprised if volume starts coming in and we start seeing some loading, right, as they say. So that's one to watch as well. Okay, NBY, we covered that guy. SNDL, haven't taken a peek at this guy in a couple of days at least. Let's see how it's doing. Okay, SNDL, here's the thing. From everything that I have seen, Tilray, SNDL, Sundial, these are not great companies when it comes down to the fundamental aspect, right? They're not great companies. However, because a lot of the better companies in the cannabis space right now are OTC, there's not as much volume there. So the volume comes here. Any cannabis news, the volume comes here, right? This is one that is holding up decently at around 75 cents. So risk reward here down to 75 cents. It is curling. It's putting in what looks like a bottom right now and trying to curl. So I got to give it to it. Like, I got to say, if I'm taking a position here, risking it down to 75 cents, would like to see the continuation of higher lows. So say we got a low here, 80 cents. Would like to see it hold 80 cents and start to kind of curl back on up. It seems like it's kind of putting in that reversal kind of pattern. We have a low, we got a low, and now we want to see, a push to the upside. I don't think it's a terrible idea, risk reward wise, and especially with, some of the recent news we have on in the sector. So I think it's one to certainly be watching for sure. GGPI, SV, and DMYI. I personally haven't been paying attention to too much to SPACs as of late. They just seemingly haven't been doing well. But this is the time if you're someone who likes the SPAC plays, this is the time I'm telling you to be loading them in the background while no one's paying attention. They'll get hot again. It's just a matter of time. It's a matter of one of them needs to set something off for some reason. Something's got to happen. A little bit of a sentiment shift into the fall maybe, but a sentiment shift there, and then these heat up again. I wouldn't be surprised if we see some crazy runs on some SPACs. AMD was a nutty one, right? AMD. This thing went nuts. I mean, we're getting up there, right, on this guy. So this is the weekly chart right here. Look at this past week. I mean, we had a crazy run this past week. Let's see how AMD does. 107-ish is an area. Couldn't break above. So let's see 107 area. If that breaks in pre-market, wouldn't be surprised. Market's green right now. Futures are green, right? Go back to futures really quick. If I pull those up, here they are. So S&P, we got the Dow looking decent, up almost 0.5% there in the S&P. NASDAQ up over 0.25%. Small caps looking like they want to be up 0.5% going into tomorrow. We'll see how this plays out, but if this kind of holds up, I wouldn't be surprised if AMD opens up even higher come tomorrow. So I don't know. I personally, at this point, going long, I would feel less comfortable myself, but doesn't mean that this can't keep on going for sure. That being said, mRNA, look at this chart. Okay, I think we started to read, this is the weekly chart. Let me go back to the daily. We're really getting to a just ridiculous zone on this chart. The more that you look at it, the more that you zoom out, the more you look, this is getting ridiculous. Okay, so if we're zooming in the past 6 months or so, what has it done? 101 or 102 is a low, pushed up to about 200, just shy of 200, came back down 115 low here, 150, higher low, almost 200, 215. We have a gap on the chart though. This is the gap that this is my ultimate target on the downside for mRNA when that downside comes. I don't know when it's going to come. I don't want to fight it because I fought it a little bit last week and I just stupidly should not have done that. But this is what I'm looking for, this gap fill between this 270 and this 260. So like 265 roughly is a target. Now that sounds crazy because that's about $100 or about $90 down from where it's at right now, which is a lot, but the stock is up. That's a 25% pullback, which based on how the stock has been performing the past couple of months isn't unrealistic. So when the time comes, I think this is a decent downside. Now here's the thing. I'm curious, and let me know in the comments if what your thoughts on it too, because I'm curious as to what's good and what's bad for Moderna. Like, are cases going up good for Moderna? Like, I don't know. Are cases, because what is that? Is that showing that their vaccine is necessarily effective? I don't know. Like, people getting the virus that are vaccinated, is that good? Is that good? I don't think so. But the stock keeps going up, right? It seems like that the recent spike in cases, the stock has gone higher. So you can correlate the past couple weeks, recent acceleration in case numbers that you're seeing, right? The stock's gone higher. So based on that correlation, if cases pull back, you would think maybe the stock pulls back, and that's an opportunity. Now, if you went back through the history last year, we saw a little bit of a push in case numbers. Now, of course, who knows? Testing, whatever. I don't know. I'm just going off the numbers that you could see online. Whether that's true or not, I don't know. But you saw a spike in July into early August. Then it pulled back. Then we saw case numbers, going down, or daily new cases going down end of August, September, I think maybe first half October, and then it picked up into the late fall and into the winter. So you might have an opportunity end of August, September could be the opportunity for a lot of the case numbers to pull back. That also leads me into the airline plays as well, because I like the airline plays. If you guys saw yesterday's video, I talked about my airline plays. I mean, hey, these are stocks that I'm not interested in the next 2 weeks. I mean, I'm accumulating a position on these plays for the next 6 to 12 months. Ideally, potentially, that's a play. But if they recover massively, let's say in a period, let's say cases dwindle back down come September and they're back down super low, whatever. And it's okay, this kind of blip in the timeline, variant, whatever. The airlines will probably recover really nice. So airlines, if they hold up, for example, JetBlue, if it holds up in the $14 range, I mean, I see a nice move to 18 pretty easily. It's what I'm looking at, my first target. A nice move to 18 pretty easily. And then the other one I'm liking is Save. There's plenty where that came from, but Save is Spirit Airlines, whether you fly Spirit or not. But this thing came back down. It recovered beautifully up to about $40 after the lows of $7, about a year and a half ago. Then it pulled back down. Now it's pulled back down sub 20. It came down briefly sub 25 for a day. That's where somehow I actually got in on that day where the stock, I literally got in on my initial entry right at when this was sub 26. Now it's coming back down again. So I wouldn't be opposed for the airline plays to dip back down, a Spirit Airlines come back down to sub 25, even sub 20, sub 25 would be ideal on this to be accumulating. I mean, I see this, I don't see the demand going anywhere. You're seeing that non-business demand is still holding up really well. And so you start thinking about, travel time into the holiday season. Now, of course, it's somewhat reliant upon case numbers dropping, but on the surface, if the news wants to keep pushing the narrative, or if numbers want to keep going higher, and I don't care really at the end of the day, if the narrative is cases are going up and the vaccine's working, not working, you can get the virus, whatever, these are going to take a hit. They probably will take a hit, but the recovery is going to be really nice. And so I'm looking at playing right now. I have options for January 2022 So I'm going out end of January. So I'm going out about 6 months. That's my current ones. But when I buy more, I'm not going to add to those positions. I'm actually going to add into the January 2023. I'm going to buy leaps. So this is far out, right? Way out. But I'm going to buy leaps in the money. So for save, for Spirit, I'm going to buy maybe 22.50s. I'm going to buy around the low 20 strike price leaps into literally 2023. So I'm going far out, and I'm going to have plenty of time. But the intention here is that if Spirit goes from 26 back to 40, right? And I'm not looking for these things to go like, all-time highs. But if I'm looking at Spirit, I think Spirit goes from about 26 up to 40, and maybe it gets back up, maybe even 35, right? Okay, if I do the math on what these contracts are going to be worth, right? Let's say I buy a $20 strike price and Spirit goes 35, low end price target that I have. Well, these are going to be up about 50%. So I'm looking for I'm going to get a 50% return on those contracts, my target, right? And if it happens sooner or if it goes higher, I'll return more, right? And so that's how I'm going to play this. But this is giving me the time. So instead of buying shares where I have to go and I have to go spend, for example, on shares, I would have to spend a good amount of money. Let's say I buy 100 shares, right? I buy 100 shares of Spirit, okay? For me to get to that price target, it's going to be about 25 to 30%, maybe 35%, 40% return. Great. On the high end, 40%. Now, if I'm going to go with the options, I'm looking at right now, I can get a 50% return. This thing goes to about 35. Now, if it happens sooner, I can get a much higher return. But by January 2023, right, that'll be a 50% return based on these numbers. That's why I like the option play, and it's going to cost me less money. So I'm going to be able to put in essentially less money, tie up less money. And so I've already started buying some, but I'm going to probably buy some more 2023s just in case the winter goes, things go wrong in the winter and, these airlines do dip further. We'll see. But if you go back to last winter, what happened, right? They were stagnant from June all the way through November. Stagnant. They didn't move. Literally was in a range from 15 to 20. And then into November, December, January, we pushed up to 27, pulled back down to 23, and then pushed up through the winter, right? When cases were going up through the winter into about $40. Now, of course, there was the vaccine talk and all that stuff. But that's how it performed last time. So we'll see how it plays out. That's kind of my play there. Airline play. You can play. There's other ones out there for sure. Those are my ideas, at least on that front. So there you go. ASTR. Let's take a look at this guy. This is getting low. This is getting low. A lot of these SPACs are getting low. Look at these charts though. I mean, it reminds me a lot about how there a lot of these SPAC plays are similar. Thing goes from 17 hard pull. It's now finding support in the low 8s. If it can hold $8, great. If not, it could go lower. But you're starting to get to a pretty interesting spot for the long term on this play, ASTR. I see a lot more long-term view here, but you're starting to get sub 10. I think you're starting to get to an interesting spot for sure. I gave you ELRA at 0008 and you missed out big time. I don't play those types of stocks, and there's always opportunity everywhere, in the market. So it is what it is. Pow, Diaz, Organic Skincare SPAC, Pow. Powered Brands. Let's take a look at Pow. Interesting. This is a sub $10, right? So you can probably, risk reward here is not bad if you were to get out at the value at $10. So your risk reward isn't terrible pre-merger. Now post-merger is a different story. So not too shabby. Long time no see, Callum. How's it going? Mara has many groups trading it short term. Let's see. I don't trade OTCs. Penny plays on big boards, not OTCs. That's what it is for me personally. I have messed around with some OTCs, but nothing. That's a whole other side to playing stuff. It's a whole other thing. I just personally am not interested as of now. Okay, I want to look at next. I want to look at Bitcoin. How is Bitcoin doing? Let's see. sitting just shy of 40K. So it's doing its thing, right? It had this consolidation between 40 and 30, right? 30 being really good support, at least as of right now, 30,000. 40K, it tried to break through and it's pulling back a little bit. So we got some resistance up here in the low 40s. But I got a lot of lines. So this seems like this line here around 41.5, 42 is resistance for right now. I personally, after the big kind of pop it had, I wouldn't be going like short term. I wouldn't be like super interested in being long Bitcoin right now, unless it broke back above 42.5 or so. Then maybe, yeah, then it goes 45 or so short term. But I think it could use a little pullback, maybe down to like 38 or so, 37, 36, and then a bigger move back to the upside. Ultimately, right? My thoughts on this stuff is stash them away and not really worry about it too much. Put it in BlockFi or put it into an interest-bearing account where you can at least earn some interest on holding your money there, and not worry too much about it. But that does play into like the Riots and the Maras, right? So you can look at Riot. Riot's got some resistance up here at this 35 level. Over that, you got a little bit of a range to about $40. Mara is, where's Mara sitting? Similar chart, very similar chart on Mara, but putting in higher lows is doing decent. So we'll see if Bitcoin does want to pull back. These are interesting plays going forward, as in terms of like they've been kind of bleeding out, right? Past couple of, I mean, this even from, what is this, from the beginning of July through mid-July for like 2.5 weeks straight. Mara was down like every day. And then it pulled back, and then it bounced harder when Bitcoin bounced at 30K. So we're kind of in like a weird spot. Personally, you're in a weird spot until you get like a bigger sustained move on Bitcoin or on something like that. Then you can get a better feel for how these are going to play out. But until then, personally, the range has seemingly tightened up on Riot and Mara. So the range is tightened up a lot. They're not moving as crazy as they used to, which is fine unless you get a bigger move in Bitcoin. But this is what it is on that front. I do also, let's take a look at Dogecoin just for some fun. How is Doge? Doge is sitting at 20 cents still. It's kind of like it bounced here in the 16 area. It's trying to get back up into the mid 20s. We'll see, but it's really going to be relying on Bitcoin. You need a really nice, strong, bull market for Bitcoin again, and for crypto again in general, which we may be getting back into that as we saw. Bitcoin bouncing off 30K, you could get a strong push up in those names. But again, if you're someone who's looking at Dogecoin and you're like, okay, I'm going to, be buying and holding Dogecoin. Again, you understand that it's going to some degree also correlate with Bitcoin. Bitcoin starts dropping off and drops below 30K. Yeah, Dogecoin's probably not going to be above 20 cents. Probably not. Unless you get Elon Musk pumping it back up again, right? Which, possible, but we'll see. Been busy trading the market Delta variant. Yeah. AHP at 640, 18. That's nice. Those are nice plays. I was away, so I wasn't paying attention to those plays last week, but we'll see how this week plays out. I'm personally not going to get too excited on some of the mask plays, at least right now. That's that. We'll see. OTC is wild. Yeah, it is. You said previously you trade them and get out when they go up. I don't trade OTCs. I personally don't trade OTCs. OTCs though in general, right? The idea behind them, if I look at an OTC chart, I don't care really what it is. I don't have enough experience with OTCs anyway. If I see the thing up, thousands of percent as of late, would never even touch it. Never touch it. But that's just, could it go more? Yeah, sure. And OTCs, that's an interesting landscape right now for sure. But I probably have traded in my entire life 3 OTC stocks. That's it. Like 3. Yeah, I don't. Let's see. What else we got? I want to pull up. I do want to also note, because the airline idea is right. So those plays, I also feel decently comfortable putting, especially across small caps right now, being that we're in August. Now, things could change and the narrative could shift, right? But being that we're in August, I would say give it till the end of Labor Day. After Labor Day, then we can start looking at some bottom buys and start accumulations for the winter months for some plays. But that said, the airline plays and the larger cap stocks, I feel a lot more comfortable putting money there now, based on the recent dips and looking at that. If the market stays relatively strong, right, seemingly has been, we'll see how this Delta variant stuff does and how this plays out. The market just shrugs it off. I think a lot of people are looking at it right now and shrugging it off. I don't know if that's the narrative that the news and the media wants, but people are shrugging it off. from what I can see, to some degree. We'll see if that continues. But if that shrugs off, I don't think the market's really going to be impacted, too much as it's overextended. I think we need a big pullback on SPY. Yeah, we do. But is that going to be what it does? Because here's the thing. We see more cases, more shutdowns, more masks, all that stuff. What does it mean? More stimulus is potentially coming. And so people look at it both ways, that the short-term negative actually is a good thing for the market. Pump more money, right? Print more money. That's how I think to some sense that's what people are seeing. And so longer term, it's probably not good, right? Inflation-wise, but to some degree in the short term, it's not, I guess that's how the market seemingly is reacting to maybe some degree. But look at the airlines. If you go to like American Airlines, the reason why I don't like this one is because you have less range. Let's go to a little weekly chart here. I mean, you do have decent upside after the recent dip, right? You have decent upside. But here, look, if I'm looking at support here down just under $20 on American, and my target would be up towards 25, I'm looking at $5 on American Airlines. So I'm looking at from where it's at. Let's say it drops a little more. I'm looking at like a 25% upside. Could it go for more? Yeah, but I'm looking at 25% upside for my target. Whereas you can look at like a JetBlue or a Spirit or play the less, I won't say lesser known, but to a degree, I guess, less mainstream plays on the airline front for the next 6 to 12 months. And you can be looking at 50% upside, 25 to 50% upside just on stock. And then if you play, options, you can be looking at more potentially, right? And the timing on that. So, that's why I personally went away from some of these more mainstream plays. Also, I'm curious how CCL Carnival Cruise, did I just see some news this past week they were starting to book or whatever? But this thing dipped down. We got some support here down around $20 on Carnival. So these are other ones too, the cruise lines. I mean, you got close to that resistance point. So targets for me would be up towards $30 again. So on even Carnival Cruise, right? You're looking at the same kind of idea. I don't know if I would play it personally, but maybe you risk it down to about $19 and then you're looking for upside up to about $30. So you're going to risk yourself, $2-3 of downside, which would be from right here. It's about 10% to the downside, 10-12% for 40% upside, 30 to 40% upside. Pretty good risk reward if you ask me on that play as well. So, I mean, it's not a terrible idea to even throw on the list as well. I'll just note it on my thing here. And then there's Norwegian, right? NCLH, was that what it is? Norwegian Cruise. Yeah, this is it. Same. I mean, pretty much the same thing here. Let's take a look at the risk reward here. If you're looking at the lows that we just saw a couple weeks ago from where it's at, you're looking at about 12% downside with about 30 to 40% upside. Same thing. And even potentially this thing can go more. Range-wise, this has potentially more upside based on this chart than Carnival. If you do want to go, north of the highs that we saw back here. Again, this is something that I would not be looking at for the next, 3 months. I'd be looking at 6 months or more time frame on cruise lines, airlines. And if it happens sooner, great. But I would still make sure if you're playing options, give yourself time so you don't have to stress. If you don't give yourself time and you're going to play options that expire at the end of August, you really are at the mercy of the market. Number one, market's strong. Okay, it's been strong. Great. That could end anytime. And the mercy of the narrative of the media and case numbers. You don't know how that's going to shape up in the next month. We have no idea. I think if you broaden it out next 6 to 12 months, I think it's pretty fair to say that things will work their way out. And I think it's fairly, I don't want to say it's an easy play, but I think these are, if you have some patience, these are some plays that you can at least stash something in and not have to really worry about for the next couple of months, which is how I'm kind of playing it. I want to put some money there and not really worry about it. And if it hits my targets earlier, then great. Then it is what it is. But we'll see what happens. Let's see. Amazon and pins. I do like Amazon as well. If you're looking at like an Amazon into the end of the year play, I mean, look at that pullback we got. I like it a lot right here. Let's see how Amazon holds up this coming week, right? But I'll be curious to see if Amazon pushes right back on up. Amazon, another one that you can look for. You can play it a couple ways in the way I see it, right? You can play it a couple ways. You can play short-term options, right? Because Amazon, you could just go shares. I mean, you could, right? And you can get, 10% moving back in shares if it goes back to where it was. Yeah, great. But I think people are probably going to play options on Amazon. So if you play, they're expensive, but if you play options on Amazon, you're probably looking at, in the near term, if you get like a rebound in August and it gets back up to, let's say, like 3,500, you can do quite well on those options if you play short-term. Or you can look at Amazon for the next 6 months and go like out to like January 2022s and play some January 2022 options. They're going to be expensive, but you can probably have a little bit less, I guess, short-term risk if Amazon does, kind of just calm down and chill here in the mid to low 33s. We'll see if it does kind of just sit here, but it's something to watch. I want to put up the indicator where the 50 SMA. MA, let's get, there it is. So 50 SMA, the 200 SMA seems like Amazon. Yeah, it's kind of in between both. Can't really get a good sense on that. It's on the daily chart. Let's look at the weekly chart. On the weekly, Amazon has been holding that 50 SMA on the weekly, roughly speaking, which we're pretty close to right now. About $100 lower, and Amazon hits that 200 SMA. So that's not a bad idea. Risk reward wise, maybe you risk it down to that 200 SMA. If it breaks below that, you're out. If not, you're looking for a move back up to 3,500 plus, which seems like a pretty good risk reward to me. Everyone complains of manipulation and OTC is magnified 100 times. Yeah, the thing is OTC, right? Those who know how to play it can do so well, but for most people, if you're struggling, number one, with either options or big board plays, right? Small cap plays, not OTC. You're probably, and you're getting caught up and your biggest problems are FOMO and not cutting losses. OTC is probably not where you want to start. It's something you can get into and adapt into over time, but it's not something you want to just start chasing random stocks, especially right now. I think we've been seeing across the markets right now that, I think we got some more room to go on a lot of stocks. We got to we need to bleed things out a little more. There's some stocks that are just still overextended, still, even if you go back a year. I think we're getting back to kind of the cycle that we were seeing pre-pandemic. It's taking some time, but we're getting back to that kind of cycle of how we see kind of sentiment shifts, how we see sector rotation, how we see a lot of different stuff. We're getting back to that. We're not there yet, but because we kind of need to see all these, penny plays that got super overextended. They got to kind of all bleed everybody out who had no idea what they're doing and still bag holding. Once everyone's bled out, then we can kind of get a better sense on how things play. And I will say, in terms of swing trades, right, pre-pandemic, how I would swing trade, and it worked for a year, right? Well, I guess, about a year that I was doing it until, I guess the COVID market. They would be buying bottoms, right? But I'd be buying bottoms and slowly adding in as a stock is dipping. And then you get news, you're playing for catalyst plays, not playing random stocks. You're playing catalyst plays or hot sectors or something like that. Low floats sometimes too. But you're playing it and you're just being patient. You're patient. Many times it's red 5-10% before a massive run. Before you get the catalyst, before you get that news. That's how, generally speaking, it worked. Now, this market has trained a lot of people where they had the past, year and a half, trained a lot of people where you get in, it goes up. And if it doesn't go up, I don't know. That's the problem. And so I think we're getting back to that kind of market in small caps, but we'll see how it plays out. Ideally, you want to have a good sense of risk management. I think it's clear across the board. I'm not here, right? I'm not here for the views, and I literally could care less. Obviously it's fun to have interactions and it's fun that stuff. I'm not here to make, just make videos that get tons of views. The thing is, you can see it, right? People make the videos that do really well and get tons of views, and they work in the algorithm really, really well, right? And I'm not a fan of that type of stuff, generally speaking, across top three, I don't know, that penny stocks. It's like this penny stock. It's like the problem with that stuff is that, you're training people and people got trained with that stuff to just buy off of a video, which is terrible. I'd rather be here for the longevity of it. So I want to make sure people get that point. Hopefully those who have stuck with it, understand you got to have risk management in place, because I've been getting chopped up the past couple of, small caps, chop fest the past 3 months plus, right? My account's just the past 3 months. So that's why I'm kind of moving into large caps, but to a degree with some money and not really worrying, playing some options, playing some longer term options in the money, a little bit less risk on that front, but decent reward. But also, I know what I'm in on my small cap. So I'm kind of in my couple plays that I like, and that's it. I'm going to be averaging in as I see fit. Into the fall, I'll go heavier and I'll maybe go into a higher proportion of my account in small caps in the fall when things heat up. But in the meantime, no need to force it, right? So I also want to make sure for day trade opportunities, I would personally, on small cap land, I like the short side, if anything, on day trade opportunities as of right now. But we'll see how things plays out. Appreciate you for tuning in, Callum. Appreciate you for tuning in. Let's see. Sorry if I'm missing stuff. Pfizer. Yeah, we talked about Moderna, right? But PFE is doing quite well. It had an interesting chart, right? Let's go to the daily chart here. Zoom on out and go to the daily on this guy. We kind of broke this downtrend, roughly speaking. So you got some support down here around $40 on Pfizer. I would like to see it kind of, it is up a decent amount. Over 45, yeah, the party starts, and this thing can go pretty nice, probably about $50. I would say would be a target on Pfizer. But in the meantime, I would love a pullback to 40-ish. I would love Pfizer to pull back into the lower 40s, and it's kind of there now. But let's say like closer to $40. It's not a super fast mover, right? It's not going to make $5 move in a day, but I would like it's a little overextended personally, right? For the short term, could it go? Great. If it holds up here, great. It goes, great. But if I was going to go long now, I would like it to come back down closer to $40, take a position there, have my risk set to let's say 38.50 as my downside. If it goes under that level, I'm out, and I'm looking for $50. That would be how I play Pfizer personally, if I was going to play Pfizer. OTC works. Yes. The thing at OTC too is that I think I made a video a couple days ago too. Posted last week about the guy pumping and dumping and got caught. It was it was OTC. The guy that was called out in DMing people and saying, "Hey man, let's get in now, start buying up, and then we'll all post and pump to our followers, after we're all in, load it up, and we'll just have our sell orders ready to go, and we'll be getting out." That's a lot of that's OTC, right? Because if you can get a move of 50 to 100%, like nothing, because some idiot just market buy, just starts buying because they want to buy because they saw a post, that's how you kill it. That's how some of those guys are killing it. Are they doing it the right way? No, but that's what you gotta be very careful, because if you think that stuff happens on the big board plays, on plays on the NASDAQ and on the New York Stock Exchange, even the penny stocks you see there, right? If you see that stuff, even Amex, if you see that stuff here, and it's nasty in the OTC. As long as you can see it, identify it, you're fine. But a lot of people don't. So hopefully that that's somewhat helpful. Swing trading takes a lot of patience. It really does. It really does. Because there's an art. If you're playing small caps, there's an art. There really is. There's an art of knowing what's going on, but not knowing too much. Like when you start seeing the massive threads and due diligence threads on Twitter, on social media, many times. Now, not some of these plays end up becoming great plays long term. Many times. You're caught up in the story, you're caught up in the whatever, the CEO, and you want to understand that stuff, see the potential, but also understand that what a lot of these guys do, right? What a lot of these companies are here for. They're here to make some money. And a lot of times they're not necessarily here to improve the product. They're here to make money off the stock and the pump and the dump. Now, on a company level, press release, offering, reverse stock split, just cycle, repeat. I mean, it happens all the time. And so you have to understand that as well. So you want to be tied up not too much in the story and into the narrative, but enough to understand that it's a good idea and it makes sense, but also understand your downside. That's why I personally like a lot of the bottom plays. Post offering, when it gets quiet, no one wants it, you start taking a peek. Are there any catalysts? Do you have any data coming up? Then it gets a little more interesting, and your risk reward is significantly more in your favor when you get a pop, when you get a pump, news pump, whatever you want to call it, right, on some of these plays. But, there's an art for sure, and it takes a lot of patience for sure. Patience pays. Yes, it does. It does. NTLA. Interesting one pot on my weekend scan. It is interesting. I do kind of like it here. It seems like it's getting kind of held up and loading up here in the 120s area. Looks like down to, I mean, you have decent risk reward here. Decent risk reward. If you can hold this, I mean, here's your gap, right? You got a decent gap down here to about like $90. So if you fall below 125, 120, gets heavy down that level, maybe it hits 100 and then drops. I don't like it there, but if it holds up in these levels right here, low 100s, low 120, and low 130s, I kind of like that. I kind of like it. I believe someone also mentioned this one a while ago too. If I'm not, this is a familiar play, I feel like, but very nice. It's a very nice setup, I think, personally. If you're going to stick to the risk reward, if you're going to stick to the risk reward, let's say you buy under 140, okay, you're going to risk yourself maybe down to like 125-ish, risking about 11%, and your upside here, maybe you're targeting up here towards $200 again. You got some good range on this chart. Decent range. I like that. Thoughts on GE? Let's take a peek how this bad boy is setting up chart-wise. It's interesting, to say the least. We do have some decent resistance up here in the $14 to $15 area. So let's draw some lines in here. Personally, for me, I'm not a big fan of buying it right up if it gets up into that level. Yeah, you could be playing a breakout play, and then breakout could make a nice move to about 16, 17 bucks. But let's do that. Let's draw a line right around that 17 area. Why? It's because of consolidation back in here. It dipped down hard, held up here, bounced, and then fell through. It could be an area to watch. But if it holds up, let's say we got a 50 SMA is about to cross the 200. It's a decent bullish sign. If it holds up here in the $12 area, not a bad idea, not terrible risk reward play. But I don't know. I'm just not a huge fan. I would like to see this thing, to be honest, falling off a little bit more for a better entry. And then, because it's got some good resistance. It's shown the past couple of weeks, past couple of months, actually. If we go back to, this is now, let's look at the daily chart. Yeah, we got a double top here about this 1440. That's a key area. 1440 is a key area. So I would like it lower if possible. UPST. Daily looks good. Earnings soon. I wouldn't play the hype. Yeah, I would play the hype pre-earnings. Yeah, decent risk reward here. You have, some resistance to get through here in the 135, but down towards 110 is your kind of your risk. So you're going to risk about, let's say, $10 down for a move of $10+ up. And if you get a really nice hype into earnings play, you could break that 135 into earnings and go to like 140, 150 pretty quick. Seemingly on the chart, you can go there pretty quick, and then you can get out, take your profits, and maybe hold a tiny bit, hold like 5-10% into earnings if you want to, if you're playing shares or options. I mean, I would just probably stay away. If you're going to hold options through earnings, the risk just doesn't make sense, and you're going to get. Personally, I'm not a fan, but decent risk reward here. We're down towards 110. If it falls under 110 and closes under 110 1 or 2 days in a row, out, and then targets up here 135, 130 to 135, targeting a breakout over 135 for more, maybe up towards 140, 145, 150, and then wouldn't mess with the earnings, but those are decent areas. Those are decent levels. I'm a fan of SoFi, massive fan of SoFi. So SoFi, I'm building out. That's actually one of the large caps I have a position in. I'm building out. I may grab some longer dated calls. Maybe I might just go with shares. But I think there's enough upside shares here that I'll probably just play shares. The reason why I'm playing the calls on the airlines, there isn't as much upside. SoFi can go 100% realistically in the next year, whereas the airlines probably are not going to go 100% in the next year. So SoFi shares have enough upside, in my opinion. They got a good 60% upside, 50+, pretty doable. Also one of the heaviest shorted stocks on the market, so it's really kind of setting up where it's at right now. I love it down here. Sub 15, I've been selling. I sold last week. I bought some shares. So I'm building out a position. And then I sold. I've been selling puts at $14.50 and then $15. So I've been, anything under $15, I like it, right? So if I can get additional shares under 15, that's awesome. And so the way I'll do that also sometimes is I'll buy some shares and then maybe I'll sell a put, right? So if it ends up, let's say, sub 1450, if I sold a 1450 put, I'm going to get paid like, I don't know, 25, 30, 50 bucks sometimes, for those puts to be sold. So I get paid 50 bucks and then I got to buy the shares at 14.50. Great. It's fine. It's fine with me. I don't care. I like it for like a longer term play. Ideally, I would like to see SoFi low 14s, mid 14s. If it starts falling below, could it come down quite a bit? Yeah. And so I probably would cut my position and then in the short term account, and then just, long term, it is what it is. Buy some more and forget about it, right? IRA type of play. This is the next position that I want to load into my IRA heavier. As of right now, I have some other stuff in my IRA, but this is one that I would like a lot. And I'm probably going to make a video too going forward, because I think there's too much talk. There's too much about the short term. And I think the past couple months, people realize it too. Those who've been getting hurt and been getting killed. Realistically, there is like one, this is like, I guess, a kind of a precursor to that. There's like number one recommendation that I would say, if someone who is like 30 years or younger was like, what do I do? Right. Had no idea what to do with their money. I was like, what would you recommend? Right. As someone who's, I'm sub 25, right? I'm 23, but as someone this is honestly goes for anybody, but the younger, the better, right? At the end of the day, in my demographic, I think it's like mostly people who are like 35 and younger, generally speaking, mostly. But if you're like in that kind of age range, right? Not even like sub 40, IRA, open an IRA, put your money into VOO, Vanguard's S&P ETF, and literally forget about it. But have a recurring deposits. If you can max out your IRA every year, do it. And if you're not interested in following stocks closely and you want literally to not have to worry, just do that. So my brother's 18. That's what I have him doing. I'm like, guys, they have some part-time jobs this summer. I'm like, guys, open the IRA, put some money in, and literally forget about it. Forget about VOO. Every time you can add to it, just buy more VOO and not even worry about the IRA. And that is proven over history to do better. Now, of course, where it gets fun is you start going into like, let's say a play like SoFi in the IRA, you load the IRA. Now, I'm not saying all in. I'm saying if you take a portion of the money in your IRA and you put into SoFi, and in, let's say, 2 years, this returns 100%. Now you're like, okay, awesome. I beat the market returns, and I'm not paying taxes on this money, and I can take that money that I just made on SoFi and then roll into VOO, roll into the S&P ETF, and let the S&P compound at its rate and do its thing. Yeah, the S&P probably can get a decent pullback in the coming years. I could see it, sure, but buy more and then just patient. And you're not worried about that money for if you're sub 30 in 20 plus years, right? So that's like the best way to go about it for most people. I mean, I'm not saying that's the only thing you should and could do, but if you're not doing that in the background, you're probably going to be kicking yourself when you're 50 plus, right? So I would recommend that. Have that going on in the background in the back without worrying. Then you can talk about your active accounts and your individual plays and stuff, but do that in the background and just you kind of have a safety net to some degree. So I would highly recommend that if you're not already doing that, but I'll probably talk more about it in the future. Carnival Cruise, I kind of like it down here, to be honest, but I would give it time. I would give it 6+ months on that. APC and APT. We talked about APT. If you go back to the beginning, the first 10 minutes of the video, I talked about a bunch of mask plays and a bunch of COVID-related plays that we kind of talked about some of those, which is nice. SoFi, I get junk mail from them all the time. I get tons of stuff from SoFi. They're sponsoring the stadium, the Charter Stadium. It's SoFi. It's going to be SoFi Stadium as well. I recommend you put it in a Roth versus a traditional. Yes. Absolutely great advice. Yeah, for sure. I mean, I'm telling you the Roth. Telling you the Roth. The fun becomes ultimately, right, if you get to that point in time where you have either you're retired from a job, wherever age you're at, or you have more time to kind of mess around with your Roth and you have a more experience, or you're someone who's been a consistent trader for 10 plus years, then that becomes so fun. Think about this, right? If you can compound an account, right? If you have the strategies to compound your account at X%, beating the market rate, and some traders do so well, right? But if you just took that strategy and you took that to your IRA, that becomes so much more fun because you're not paying taxes on the gains. So you go and make you have a massive year, right? And people have done it, right? People who traded the COVID markets and whatever did so well the past couple of years, past like 18 months. If you do that in your IRA, there's people who are sitting on millions in the IRA, right? And you think about the IRA, you're like, okay, how do you get to millions of dollars? If there's only like a $6,000 max per year, there's backdoor IRA strategies and whatnot. But that said, if you can consistently compound and you start trading more and more, and you start really killing it in terms of gains, you start looking at that money and you're like, oh yeah, because you're not paying tax on it. It's sick. So I would recommend that. As you know, I can't wait to get to the point where it's like I can mess around with the IRA more. For now, I'm kind of just putting stuff in there and not worrying about it, not trying to be in like risky stuff, too many penny stocks and stuff like that. But that's where the fun really kind of that's where the fun gets. Obviously, you can't really like use all that money. You can take out, I forget the exact rules. I think you can take out some profits. I forget what exactly you can take out. But generally speaking, you're not paying tax on that money at all. So I'd recommend it. Okay, that said, COCP, I do want to, let's pull this one up last. This is another one that is probably going to get some attention with cases pushing back up. COCP, beautiful chart right down here. I mean, you have a pretty nice risk reward down low ones with spike potential to 125 plus. I mean, this is a decent risk reward. I would not want to see this thing under $1. So if it starts dropping down below 1, I would be getting out, but 15-cent risk for a possible bigger move. So you're playing a bottomed out play. I kind of like it, but if things calm down and this isn't a good play, it easily could drop below 1, go to like 80 cents in the next month and a half. Don't be there holding it the whole way down, right? Take your loss, and you can always reassess. For example, if you go back to September, October, November last year, right, there was opportunities, right? Fell off, and then it bottomed out. You kind of see it putting in lows. 75 cents, and it was a better opportunity, right, than holding it, let's say, all the way down after it kind of stair-stepped on up, holding it all the way down, and then, yeah, you got some pops, but was it worth holding it the whole way? You probably could have done a better job of cutting your losses back in here as it started to crack down below support, cutting your losses and moving on and reassessing as it dropped lower. If you like to play, catalysts, whatnot. So that said, I am going to wrap things on up. May change if Biden raises taxes. Yes, for sure. That's a whole other landscape as well, right? Long-term capital gains, and we'll see how that stuff plays out. I wouldn't be surprised. You can withdraw anything you put in, but not the profits without penalty. Okay, before 59 and a half. Okay, that's what it was. I remember seeing. I forget exactly what it was. There you go. But I appreciate you guys for tuning in. I'm gonna wrap things up. So go back to the beginning, the first 10-15 minutes. We talked about at least some of the biggest plays I'm looking at this week, see how they react. And that's that. Appreciate you guys for tuning in. I will see you guys in the next video. Hit that thumbs up button. Consider subscribing if you are new. I'll see you guys in the next one. Peace.